A small-cap crypto firm just made a very big move. According to AMBCrypto, BitMine Immersion Technologies plans to sell up to $20 billion of new stock and use the proceeds to buy more Ethereum. The goal is aggressive: build one of the largest corporate ETH treasuries in the world, potentially targeting a meaningful share of total supply over time. That headline is what has traders' attention today. According to AMBCrypto's report on the company's filing, BitMine expanded its at-the-market, or ATM, equity program by roughly $20 billion, bringing total capacity to about $24.5 billion. An ATM lets BitMine drip new shares into the market over time when conditions are favorable. It does not mean the full amount gets raised tomorrow. According to Yahoo Finance, Cantor Fitzgerald is listed as the sales agent, and management has flagged that net proceeds are primarily earmarked for accumulating ETH, with some flexibility for mining expansion or other crypto initiatives. Why does this matter? Because BitMine is already a sizable Ether holder. According to Cryptozard and other on-chain trackers, the company controls roughly 1.1 to 1.2 million ETH, which is around $5 billion at recent prices. If BitMine keeps buying at scale via an ongoing ATM that creates steady, programmatic demand that can reduce liquid supply and amplify upside moves during strong markets, there's also a powerful narrative component. According to TradingView news coverage and Economic Times recaps, BitMine's stock erupted after it pivoted from a pure mining story to an Ethereum treasury story, drawing comparisons to MicroStrategy's Bitcoin playbook. The shares spiked dramatically, then cooled, and later got another boost when, according to those same outlets, Peter Thiel disclosed a significant stake. The market loves a simple thesis, and public company as ETH accumulator is as simple and viral as it gets. Let's talk mechanics for a moment. According to AMBCrypto's summary of the ATM terms and Yahoo Finance's follow-ups, underwriter commissions on these programs typically run a few % of gross proceeds. BitMine pays that fee as it sells shares, then deploys the remaining cash into ETH. The trade-off is straightforward. Existing shareholders face dilution from new shares, while management bets that the ETH on the balance sheet will outpace that dilution over time. It's essentially a leverage via equity strategy on Ethereum. What could this mean for ETH itself? According to market data on TradingView and flows tracked by ETF watchers, Ethereum has already been buoyed by spot ETF inflows and shrinking exchange balances this summer. If even a fraction of BitMine's headline ATM capacity ends up as real ETH purchases, that's a persistent bid sitting under the market. Add steady institutional inflows and you have supportive tailwinds into the next quarter. Of course, ATM is our discretionary. According to AMBCrypto and Yahoo Finance, the company will only sell shares when it thinks conditions are right, so deployment pace may ebb and flow. There are obvious risks. According to Economic Times commentary on similar treasury plays, new share supply can weigh on BitMine's own stock, especially if the market perceives the company as selling too aggressively. ETH's volatility cuts both ways. A sharp drawdown would mark to market the treasury and stress investor confidence. Execution matters too. According to CoinDesk's recurring coverage of corporate crypto treasuries, building and safeguarding multi-billion-dollar holdings requires airtight custody, disclosures, and risk controls. And any large, market-moving corporate accumulation is likely to draw regulatory attention to transparency and market integrity. Here's what to watch next. First, according to AMBCrypto's reading of the filing, management will provide periodic updates on ATM usage. The key is the pace of actual sales versus headline capacity. Second, on-chain tracking from services like Cryptozard can help confirm whether BitMine-linked wallets are net buyers of ETH over time. Third, listen for clarity on allocation targets, any hedging practices, and custody arrangements in upcoming company updates. Finally, watch the macro backdrop. According to TradingView's aggregate data, if ETH keeps grinding higher alongside ETF inflows, a bear scaling in over months can have real price impact. If macro turns risk-off, the ATM could slow or pause. Bottom line. According to AMBCrypto, BitMine has positioned itself as the MicroStrategy of Ethereum. If it executes on even part of this $20 billion plan, it becomes a persistent source of demand for ETH. If it stumbles, shareholders eat dilution without the treasury lift. For traders and long-term holders, this is a story to keep on the radar through the rest of 2025.